Hello, everyone. I'm Nova Lui, RHB Bank's Head of Investors Advisory. Today, I have Dr Sailesh Jha, Group Chief Economist and Head of Financial Market Research. Hello, Dr. Jha. Nice to see you again.
Nice to see you again, Nova.
Hi. I noticed that the expectation of a rate hike path for Malaysia is far below from the rate hike expectation for US Federal Reserve, where market priced in even up to 8 times rate hike this year. What is the basis of the lower rate hike path for Malaysia?
Okay, so the difference in the trajectory of policy interest rates in Malaysia versus the US is of difference in the dynamics of inflation in Malaysia versus what it is in the US. Keep in mind that over 40% of the consumer price index is privy to the subsidy here, whether it's fuel or food. Whereas in the US, it's completely market determined. And so, in a sense, the inflation in Malaysia is artificially low by design. And this has, is quite helpful for Malaysian economy currently because we're at early stages of sustained recovery, keeping in mind that the economy actually contracted by 3% on a quarter-on-quarter basis in the first quarter of this year. The 5% year-on-year number looks fairly, looks robust, but you have to look at the momentum. It was fairly, not good. So with keeping this in mind that we're early stage of recovery, inflation needs to be kept in control. Then basically the policy outlook on subsidies remains unchanged, meaning fuel and food subsidies are going to remain in place this year. And so what that sets us up is not a situation like in the US where a hike at every meeting. Here it's on again, off again. So for example, we have recently changed our OPR rate view on back of the surprise hike by Bank Negara at the May 11 MPC meeting. We are now looking at another hike in September. So skip a meeting, right? And then we'll be at 2.25% this year. And then next year, we're maintaining our view, another 50 basis point hike, 5%. The terminal OPR rate from our perspective is 3%. So basically 100 basis points from here. At the Bloomberg consensus estimate for the OPR rate for end 2022 and end 2023 is 2.45% and 2.9%. So we're more sanguine on the outlook for the policy rate in Malaysia compared to the consensus, simply because we think that inflation will peak here in terms of both the core CPI inflation and headline CPI inflation by the third quarter of this year, and we should start seeing a deceleration towards the fourth quarter of the year onward. So there's no real need from our perspective to hike aggressively. There is a need to adjust the policy rate because monetary condition extremely accommodative right now. So the path to normalization is warranted. The economy doesn't need that emergency support like it did from 2019 to 2021.
What is the relationship between OPR and KLIBOR? Do they always move on the same direction and momentum?
They follow each other very closely. As long as we don't have any massive shortages of liquidity in the market, that's the idea. Remember that the overnight policy rate is the central bank policy rate, right? And the KLIBOR rate is essentially the rate at which transactions are done between banks and corporates. Mainly, a lot of it is 60% is bank to bank, 40% is bank with corporates, and a lot of it has to do with derivatives transactions. So that's how the OPR and KLIBOR work.
Thank you, Dr. Jha, for sharing RHB Bank's house view on Malaysia's interest rate hike cycle and some insight on relationship between OPR and KLIBOR. Credit Range Accrual (CRA) is a structured investment product based on reference underlying such as Kuala Lumpur Interbank Offer Rate, also known as KLIBOR. Depending on different tranche, it is possible to use either 3 months or 6 months KLIBOR rate. CRA potentially pays higher interest if the reference rate stay within a predetermined range. It is a principal protected if held until maturity. How does it work? First of all, the CRA has a prefixed range, for example, 0% to 3%. In this example, the reference index is 3 months KLIBOR, which is 1.99% as of 5 May 2022. The reference index in this case is the 3 months KLIBOR, will be observed on daily basis. If the 3-month KLIBOR is below the range of 3%, daily interest will be accumulated. The interest is 3.5% in this illustration. If the KLIBOR goes above the range of 3%, daily interest will not be accumulated. However, if the 3-month KLIBOR fall below the range of 3%, daily interest will be accumulated again. The accumulated daily interest will be paid out on quarterly basis. Normally, the tenure of the CRA product will be 3 to 5 years. In this case, there is a step-up range feature where the range is set higher each year, which provides more buffer if KLIBOR is increasing. To sum up this structured investment product, CRA is suitable for yield enhancement and principal protection if held until maturity. It usually has 3 to 5 years of maturity, and investors are encouraged to stay invested and held until maturity. Who should invest into CRA? This product is suitable for conservative investors with 3 to 5 years of investment horizon and aim to have return potentially higher than fixed deposit. To know more about this structured investment, please contact our relationship manager and refer to the product term sheet.